All right, well, hello and welcome, folks, and welcome to another Tuesday talking how to get money for your business. Today, we're more specifically going to be talking about cash flow financing. Here's our contact information on the screen, and of course, if you're tuning into YouTube, go ahead and like and subscribe. That way you can stay up to date on all of the most recent happenings in the world of business finance. All right, so get your free business credit guide. All you have to do is text the word credit to 602-497-2257, and we will send that over to you. Now, you may be asking yourself, what is cash flow financing? So cash flow financing is helpful to companies that generate significant amounts of cash from their sales, but you don't have a lot of like physical assets like equipment or other types of machinery that many times could be used as collateral. So in this case, if you just have revenue that's coming in on a daily, weekly basis, this is going to be a phenomenal option for you. So if the company generates positive cash flow, which is very important to be positive cash flow, it means that the business is bringing in enough cash from its revenues to meet its financial obligations. Banks and creditors will analyze your positive cash flow, and they will then determine how much credit to extend to company. So if you are really trying to figure out how to get access to credit, and you're bringing in revenue and you don't have many assets, you don't have maybe good personal credit or established business credit, this is another phenomenal option. Now, cash flow loans can be short-term or long-term. Cash flow financing can be used by companies looking to fund their operations or to acquire another company, or it can be used for any other major purchase, really anything your business needs to do. Now, you as your company are more or less borrowing from a portion of the future cash flow. As you have a steady track record of bringing in money, that is what makes that lender feel comfortable and reasons for it to feel that it's going to get paid back. They basically have a set algorithm. They predict what you're going to generate. They expect how much money is going to be coming in. And then banks and creditors will create that payment schedule. And then based on their projected or your projected cash flow, that's what really, looking at the historical results, is what they're going to lend on. Now, business may have a temporary decrease in cash flow, especially what we've been seeing happen this year with the shutdown and the pandemic. So it doesn't eliminate this entirely, though. If your business is still thriving or it's now starting to pick up again, this is a good option. So cash flow disruption could come from less than stellar seasonal sales, or like we just mentioned, a company also might be facing unexpected expenses. So if you had a bunch of equipment that needed to be replaced or whatever those unforeseen circumstances are, sometimes that happens. Starting up a new project, that could be costly, and this could create a gap in cash flow. Now, decreasing cash flow can also come from taking advantage of a limited time opportunity, maybe buying up some inventory that was at a discount, equipment at a steep discount. Businesses can also suffer from cash flow decreases when they need to make emergency repairs on their equipment. Now, so your cash flow statement. All the cash flows are reported on a company's cash flow statement, usually referred to the CFS. If you don't handle the accounting or bookkeeping, your accountant or bookkeeper would know how to actually access this. Cash flow statement records the company's net income or profit for the period at the top of the statement. Operating cash flow is calculated. Sometimes having just a standard profit and loss statement will work as well. Now, operating cash flow includes expenses from running the company, like bills to be paid to suppliers, plus operating income that's generated from sales. Cash flow statement also records any investing activities. Now, investing in activities are securities or investments into the company itself, like buying equipment. Also, cash flow statement records any financial activities like raising money through lending or issuing of bonds. Now, your projections, the cash flow projections, two areas that are vital to any cash flow projection are, one, a company's receivables and their payables. So accounts receivables are payments that are owed from customers for goods or services that were already sold. Accounts receivable may be collected on net terms. So this could be 30, 60, 90 days in the future from when actually looking for these funds. That's what a net 30 or net 60 or net 90 actually mean. Now, accounts receivables are future cash flow for goods and services that you're sold today. So you haven't been paid, but you're expected to be paid that. Banks and creditors can use the anticipated amounts of receivables due to be collected as a way to help project how much cash will be generated in the future. And then they also have a way of using that to help guarantee that loan or line of credit that they'll be issuing. Now, account payables. The bank must also account for the accounts payables. These are short-term debt obligations, like money that you owe to the suppliers, whoever you're receiving your product from. The net amount of cash generated from these receivables and payables can be used to kind of foresee and forecast the cash flow. The amount of cash that's being generated is used by the banks as a way to determine the size of the loan. Now, so banks have a couple of guidelines that you got to follow. So banks may have specific guidelines as to the extent of positive cash flow needed to get approvals for a loan. Some lenders are going to want to see a minimum of $10,000 a month coming in, but I've seen some smaller businesses like a single nail stylist who brings in a couple $100 a week. I've seen her be able to get she got like a $7,000 loan like that. It was really nice. So also banks have a minimum credit rating requirements for companies with outstanding debt in the form of bonds. So this probably isn't most of the businesses that are on here, but if this is you, give us a call and we can kind of talk about that. Companies that issue bonds are assigned credit ratings, and this is a way to access the leverage of the risk associated with investing of those company bonds. Cash flow loans versus asset-based loans. So there's a difference between cash flow financing and asset-backed loans. Asset-based financing helps companies to borrow money, but the collateral for the loan is the asset on the balance sheet. The bank puts a lien against that asset for collateral. So just think about your house. The bank, if you have a mortgage, has a lien against the asset of the house. So in this case, since cash flow loans don't necessarily have that asset to attach itself to, they're going to just look at the projections of how much money's coming in. So it's more of like a secured versus unsecured type situation. Now, asset-backed loans. So asset uses collaterals that could be equipment, inventory, machinery, land, company vehicles. Sometimes you can combine the two of these. If you have some assets and you also have some cash flow, you can combine these. But asset-backed loans are slightly different. If the company defaults on an asset-backed loan, and you don't pay it back, the principal and interest payments, then the lien on the piece of equipment or property is what they can legally seize and take that back. Hence, your business could lose its ability to function if you put up some equipment for collateral. That's why we like looking at these cash flow based financing tools. And like I said, we do like there's merchant cash advances. So if you're just running payments on a daily basis, there's so many different types of cash flow lending, but reach out to us. Give us a call, 888-524-9273, and we can totally look through your situation and see if you would qualify for any cash flow financing that's out there. Now, cash flow financing works in a similar way to that asset-based lending, and it is that cash is being generated and it's used as collateral for the loan. So the fact that you're bringing in money is the way that they can kind of collateralize that. But the cash flow financing doesn't use a fixed asset or physical assets as collateral. So which companies are most likely to use asset-based or cash flow financing? So companies tend to use asset-based financing are companies with a lot of fixed assets, like manufacturers. You have a lot of equipment, you got a lot of inventory, stuff like that. But companies that use cash flow financing are often companies that don't have a lot of assets, that are service companies, hairstylists, barber shops, nail technicians, landscapers. There's a lot of different service industries out there, even medical fields, like therapists, things like that. You can go over to investopedia.com and look at cash flow financing to see what kind of common industries qualify for this. Now, what are some advantages of cash flow financing? Cash flow loans strike a balance between the loan size, the APR, and the length of the application process. This is better than many online unsecured online loans because you can get these very fast, and they've done an aggressive calculation, but there is a limit to the amount of your loan. But it's a really good path to take. Now, some other advantages of cash flow financing are cash flow financing can also be better than traditional financing. Traditional banks offer you larger loans, often over $1 million, and it's usually at a lower APR, but it could take months to fund your account. Very long time. So we know a lot of folks who are, still waiting on, PPP loans, people that are still waiting on their EIDL financing. So qualifying for cash flow financing, often you'll need to have a few years in business. You may need to meet certain minimum credit score requirements, just depending on the lender. You will need to provide historical cash flow data, so bank records, and present your accounts receivable or accounts payable so that the lender can determine how much to loan your business. Now, in recap, really, cash flow financing allows you to borrow against the future cash flow. So if you've been doing business and you have a track record of doing business, they can look at that and project what they would be able to loan on safely. It generally is used for temporary needs. So let's say that you need to make payroll or you had an unforeseen expense come up. This could be a great solution. And then such as buying equipment quickly, starting a new project. There's a lot of different options depending on your business type. It can be a good solution for service industries which aren't going to have much in the way of traditional collateral. So like we talked about, if you're a coaching business, but you're bringing in a steady monthly revenue, this is going to be a great option for you. To find out more and how to actually get money with cash flow financing, reach out to us. Go over to wiseguysandties.com, schedule a business credit consultation, or 888-524-9273. Give us a call, and where we will sit down with you and we'll go through, well, do you have cash flow? Do you have collateral? Do you have credit, either personal or business credit? We'll look at what you have, and if we can take, one of what you have or a combination to really find the funding that you're looking for. Like I said, my name is Ray Fleming with Wise Guys and Ties, and we look forward to helping you find the funding you need. Now, of course, you may not qualify for any funding, but at least you know if you will or not. And if you can't, then of course we will talk about the process of building business credit. It takes a little bit longer, about 6 to 12 months, but that is the go-to where if you can't get any funding today, make sure you start today building your business credit. So in 6 months from now, you are able to get that funding that you need. Once again, my name is Ray Fleming. Tune in tonight where we have another credit banking mastermind where we are going to be going through different strategic ways on manage your personal finances and getting out of debt strategically so you can pursue your American dream. See you all tonight on the Credit Banking Mastermind. Good night and God bless.